going on, guys? It's your boy James D. Anderson at I am JD Anderson, coming back to you with another just quick finance video. Chilling in the home office, so I said I'll go ahead and give you guys some quick knowledge. And in this video, we're going to talk about 5 reasons why you probably want to consider term life insurance over whole life insurance. So reason number 1, term life tends to be a lot cheaper than whole life insurance. Usually whole life insurance will probably cost you anywhere between 25 to 50 times more, and that's huge because if you got maybe about a $250,000 death policy on term insurance, you're probably looking at about 25, 30, 40 bucks a month. That's very reasonable. But if you have that same coverage as far as whole life insurance is concerned, you're probably looking at anywhere between $500, $600, $700 every single month on that same coverage. Now, yes, I know people are going to say, where you build cash value, you have an investment tied to it. And we're going to talk about that a little bit later. But for people that's starting out, that's looking to become great with their money, looking off to just start and become better and just get life insurance, term insurance is going to be a lot easier to obtain. It's not going to strap your cash. It's not going to crush the bank. It's not going to kill you, and you can get some coverage started now, especially if you're starting out and you have nothing as of right now. Reason number two is whole life insurance and variable life insurance, universal life index, all those things that are tied in as far as an investment alongside of your insurance policy. Typically, you can get a better rate of return if you were to take the money and actually invest it yourself. So the same money that goes in insurance policy that goes towards the investment, you can usually do a lot better on as far as the returns if you took that money and just invested yourself. So that's where the term by term investor difference come from. It says, hey, instead of buying a whole life policy with the same index funds tied in there, how about you just buy a term policy and then just take the difference that you will spend on a whole life policy and actually take that and invest it on yourself. And typically, from what I've seen with the people that I've worked with, you are going to get a better rate of return. Number 3, listen. Universal life index policies, whole life insurance policies, they're riddled with fees. I mean, there's a lot of things going on between the investment side, the insurance side. So you got a lot of fees that's actually tied into it. So one of the things that you probably want to consider term over whole life is just the reduced amount of fees, especially if your person is just getting started. I mean, literally, after everybody's taking out their percent here, service percent here, service percent here, you start losing a lot of the investment, and it costs you even more because you have so many fees attached to it. It's crazy. Number 4, ladies and gentlemen, is simply this. You have to borrow the money that you put into the actual, they call it cash value account, but if it's supposed to be my own investment account and I'm putting money into it and I'm building up over 15, 20 years to get to this cash value, why do I have to borrow my own money that I put into the policy itself? Hey, what's up, Jay? What's up, Jay? Hey, dude, I need to borrow $100. Yeah, dude, I got you, man. Good, man. That's what's up. But you know I got to charge your name, dude. And of course, guys, you already know if you have something that's attached to being borrowed, there's going to be interest. So when you hear the word borrow, make sure you get interest, and like I say, it gets confusing. So I just like to keep it simple. Yes, I understand I cannot take the money from the death benefit, but the money I put in to build up the cash value, I should be able to take that money out without borrowing. So one of the reasons why you might consider buying a term and just investing on your own, you don't have to borrow your own money. And number five, last reason here that you might want to consider the term over whole life is simply this, is that when you actually pass away, when that day comes when you have to call in that death benefit, and you are a person who has cash value left inside of your account and you didn't borrow against it, you got cash value inside of your account, did you know that the actual insurance company will absorb your cash value and not pay it to your family? It's ridiculous. You can actually Google this, and it says that all companies say that when you pass away, and if there's cash value left there, then guess what? We absorbed it as a company, and we just pay the face value of the life insurance policy. So real simple. Say, for instance, I got $50,000 in cash value on a $200,000 whole life policy. I pass away unknowingly. Guess what? That $50,000 the company takes, and my wife or my family just gets the $200,000. Now that's kind of crazy when you kind of think about it, and it states it right there in black and white. I mean, you can literally Google this, just Google it, and you will understand where I'm coming at from this and why it might be better for you to just invest on your own and then perhaps you know, buy a term policy. I don't know. It's up to you. Just 5 reasons why you might consider. All right. And lastly, guys, you know me. I got to throw in a bonus. Let's go ahead and throw number 6 in here. Is that whole life policies tend to be pushed. They're pushed. And the reason why they're pushed, I understand it, because they pay the highest commissions. And what I found helping out with people with personal finance is not always the things that pay out the highest commissions that help people the most. So sometimes to meet a person in their financial situation, you might have to give them something that not necessarily make you the most money. You know, that's being more client advocate, that's being more client intuitive, and understanding that every instance you might win sometimes, you might lose sometimes on the commission end. But when I look at products that have a lot of commission based tied to it, I always question myself, okay, why are we pushing this so hard? Why is this your number one product? Why is this your flagship product? And if it's tend to be around whole life policies and things like that, I always question it as far as what's the real motive behind it. Am I getting help or am I getting a sales pitch? So that's it, guys. That's it for your boy James here. I appreciate you guys watching the video. Of course, if this video provided you some value, go ahead and comment down below, or you share this with somebody. Somebody might be on the fence thinking about, should I get term or should I get whole life, and they're kind of confused with what's going on. Well, I just gave them 5 tips. Like I say, guys, no way is this like telling you to go out and invest in what. It's just simply making finance easy, simple, fun, and accessible for everybody. So that's it for me. It's your boy James E. Anderson, and I am JD Anderson. Of course, you can like this video, hit the thumbs up, subscribe if you want to hang around with us. Oh yeah, and just a side note, shameless plug, I'm gonna actually post the latest podcast episode down below, and I hope you guys know that. But if you did not know, I do have my own podcast, the hashtag Be Great With Your Money podcast, where we talk about business, money, capitalism, and finance, and all those things are good, and those things we can go in depth on what I can't really do here on the video. So I hope you guys can check that out. Go ahead, guys, whatever it is you want to do, you can always reach out to me on any social media at I am JD Anderson, and then from there, guys, we are done. So everybody keep crushing it and keep being great with your money, and I'll talk to you on the next video.